Good morning from Los Angeles. It's Thursday, October 4th. I'm Alyssa Corum here with Ken Shreve, and we have your market update. On today's show, we are taking a look at tech stocks under pressure, namely Amazon and Apple. We're also taking a look at Constellation Brands after its quarterly report and Costco ahead of its quarterly report. So taking a look at the major indexes here, we have the NASDAQ leading losses down about 1.3%, while the S&P 500 and Dow are both down over 0.7% each. So what's really weighing on the market here today, Ken?
Well, I mean, there's a little uncertainty about Apple and Amazon. There was a report in Bloomberg Business Week that apparently data center equipment used by Amazon and Apple may have had a chip that was planted by the Chinese to spy on U.S. technology companies. Both Apple and Amazon have denied these reports, but apparently Bloomberg talked to a lot of government officials and other tech companies. So we'll see what comes of it, but it's definitely casting kind of a layer of uncertainty in tech. And should be noted that Amazon and NASDAQ are basically falling in line with the composite. So, but we'll see. Amazon, you can see a chart here testing support at the 50-day moving average, and Apple's still holding comfortably above that support level.
That's right. We have the NASDAQ now pulling back down below that 8,000 level, testing the 50-day line yet again. As you mentioned, Amazon's chart, very similar here. We now have it down about 1.4% in heavy volume today, but along its big run, it's been able to find support at that key 50-day line. That's the red line on the chart along the way.
Yeah, I mean, it definitely has been finding support at the 50-day line for several months, and so we'll see if support pans out again here. Still a very compelling fundamental story at Amazon, and it should be noted that in pre-market futures, NASDAQ was only down about 5 or 0.6%, so the selling has really intensified in the early going today.
That's right. And if we pull up the chart of Amazon here, if you bought all the way back at that cup with handle breakout here, a couple of opportunities to add shares to your position here. But as far as what's happening today here, a more than 1% loss in heavy volume, it is still finding support as of now. So how do you handle your position in light of some potentially serious news like this?
Well, and you also have to remember that we have 8 distribution days on the NASDAQ too. Now, it hasn't been 8 serious heavy volume declines in recent weeks, but we have had some signs of institutional selling in the index as a whole. Amazon has been actually a pretty easy stock to hold. So current holders will just watch and see how it acts around support. But we've been saying in the big picture column, taking some profits here, probably not a bad idea. Even with stocks that are up nicely, taking profits is not bad strategy here.
Yeah, it definitely makes sense. And we also want to take a look at Constellation Brands, which is gapping up today on its quarterly earnings report. The stock is off of its intraday high, but still a more than 4% gain in heavy volume. We have accelerating revenue growth here, up 10%, strong earnings growth as well, up 16%. The beverage company also seemingly benefiting from its stake in Canopy, which is a marijuana play. Yeah,
they've done very well with that investment. It was initially a 10% stake that they took in Canopy Growth, and then they increased that to some 30 or 40%. So they've done well with that investment. Beer sales at Constellation Brands up 10.5% to $1.63 billion. That's about 71% of total revenue. Kind of a disappointing performance for the stock. It did gap up, but you can see it's trying to hold above that 200-day moving average. I think the bulls certainly want to see a close near highs and see if it can hold above that 220 level.
That's right. So if you really are looking at Constellation Brands as kind of a marijuana adjacent play, I guess you could say, where would an entry point be here? Would you want to see it come all the way back above the left-hand side of that consolidation?
Yeah, I mean, I think conservatively, we probably want to wait and see this stock form the right side of its base. It's in the early process of doing that. But with Constellation, when a stock gaps up powerfully, typically that can make a stock buyable. But the fact that Constellation has given back a lot of those gains today, probably best to see what the close looks like today and see if it can continue working its way higher, building the right side of that base.
That's right. And we also have Costco issuing its results after the close today. The stock down about 1% heading into that report. And analysts estimate a 12% increase in profit on a 4% rise in sales. Now that's deceleration on both the top and bottom lines, but still relatively strong earnings growth. But how is the stock acting heading into this report?
Yeah, it's been a great performer in retail. You had a breakout several weeks ago, and this is really just a first test of the 50-day moving average. So technically, it looks pretty good. Could be a candidate for a call option trade here ahead of our earnings. We looked at Costco in the latest earnings preview column as an option trade. So you can see a nice strong uptrend after a breakout, and looks like a test of the 50-day moving average coming up. You mentioned sales growth expected to decelerate a little bit. People will be looking at membership numbers as well, but Costco's been a really nice performer in retail.
That it has. It's up 16%, even with this pullback, still up 16% from its last base breakout. So why would you not want to buy Costco, even with this pullback, which is seen as usually an opportunity to add shares to your position, but heading into earnings, that's a time of heightened risk? Yeah,
and especially in the market, broad market's looking a little unsettled here, and when a company like Costco that's made such a powerful move, some might argue that, hey, a lot of good news is already priced in here, and this is really not a case yet of support at the 50-day moving average.
Right.
It's coming down, and it looks like a test right now. So anytime you're buying off the 50-day line, you want to see a nice bounce with conviction, and then you can kind of feel that there are other buyers in there along with you. So that's not happening yet with Costco, but we'll see what results look like after the close.
That we will. All right, everyone, be sure to head to investors.com throughout the trading day and after the close for all the latest market news and analysis. And be sure to check us out on social media. We are on Facebook, YouTube, Twitter, and Instagram. So be sure to like and follow and subscribe for all the latest. Thanks for watching, everyone. See you right back here Friday.